If you stick to this one-time based trading model, you will become a profitable trader. No daily bias is required. I've added a secret refinement to the setup which maximizes the risk to reward. It's a rule-based system, so it's very easy to spot the setup. So let's get straight into the video. So the pairs it works best on is Euro USD, GBP USD, and S&P 500. For this strategy, it works best on Euro USD. The time window we're going to be looking for entries in is 3 AM to 5 AM, only a 2-hour window New York time, and 8 AM to 10 AM London time. The time frames we're going to be using are the 15-minute, 5-minute, and 1-minute. I'll go into what we look for on each time frame, and the setups we're going to be trading are based off order blocks. We're going to also look for liquidity sweeps and market structure shifts in confluence with the order blocks, and engulfings as our entry setup, which no one is showing. However, this really maximizes the risk reward if you use it right, and I'm going to show you how to use it in line with these ICT concepts for a very high probability trade setup. And it's very important to stick to the set times which we look for trades in. So, a high probability order block versus a lower probability order block. A high probability order block has a liquidity sweep and causes a market structure shift, which we then look for a retracement into to look for the entry on the 1-minute. However, a lower probability order block has no liquidity sweep. However, it does cause a market structure shift, which still validates the trade, and we can look for a retracement into this order block to take the trade on the 1-minute. So the setup is this. Before 3 AM New York time, we let the market do whatever it wants. So we let the market do whatever it wants, and then after 3 AM, what we want to do is on the 50-minute time frame, mark out the valid order blocks. Okay, so we want to mark out the valid order blocks. So for example, the first bearish order block that's valid, and the first bullish order block that's valid. So for this example, I'd mark out the first bearish order block over here that caused a market structure shift. However, as you can see, it didn't have a liquidity sweep. However, it's still a valid order block because it caused a market structure shift. Then on the 15-minute, I'd mark out this order block. On the 5-minute, I'd wait for price to tap into this order block. And after the 5-minute candle has closed, after tapping into this order block, I'd go on the 1-minute and look for an engulfing to take the trade off. So you don't have to have the stop loss all the way past the order block. You can actually refine it to this high right here. And this maximizes the risk reward. Same for this example, except this example is higher probability. And a lot of people might get faked out with this one. So after 3 AM, you want to look for the order block. Okay, so some people might mark out a fake order block over here. However, buy stops are above this high, so we wouldn't look for order blocks over here. We'd use this as liquidity instead and look for the order block above. And I've got 2 examples which I'm going to show you, so stick around and we get on the live chart examples. However, before we get on the live charts, if you're trying to pass your funded challenge or you're looking to get funded, then this automated trading bot is for you. Most people spend $8,000 to $9,000 in the space of 4 months before they reach their first funded account. But with this bot, you can avoid this waste of time and money by letting it pass the challenge for you, 100% guaranteed. Our bot does not miss. It passes the challenge usually in a few hours and the same day. So the day after, you could be funded 6 figures, trading live, making real profits. It's a zero risk investment. If you fail the challenge, you get a full refund. However, we've never ever failed the challenge, so you will be funded. That's 100% guaranteed. Get on this whilst it's still available. Click the link in the description to get funded and don't waste time. So let's get back into the chart examples. So at this point over here, it's 2:55. So at 3 AM, we're going to look for our entries. So remember, we're looking for our entries after 3 AM. The order block can be formed before 3 AM New York time or 8 AM UK time. So after this point, we're going to look for entries. So the first valid order block I can see on the 15-minute time frame, we're going to be on the 15-minute time frame to identify the order blocks, is this one right here. So why is this a valid order block? As you can see, it caused a liquidity sweep right here, and it also caused this market structure shift, as you can see right here. After this, we look for a retracement into this area on the 5-minute, then scale down to the 1-minute to look for an engulfing to take the trade down. However, for the bullish order block, as you can see, we've got all these sell side lows over here with lots of liquidity below each low on the 15-minute time frame over here. As you can see, these are the last equal lows before we have some sort of order block over here. So what you could go ahead and do is mark out this order block over here. You can either mark out the bodies or the wicks as well, whichever one works best for you. However, wicks is a more safer approach to this with the order blocks. And then all we do is scale down to the 5-minute and wait for price to tap into one of these. So we're not looking for order blocks in this area. As you can see, these have all been mitigated anyways. So what we're going to do is wait for price to tap into this order block over here or this order block over here. And what you could do actually is mark out this one over here. So after these sell stops get run, price could wick into this area and we could look for trades. And if price wants to go for sells instead, so remember we don't need a daily bias, price could tap into this order block, we'll scale down the time frames and then wait for the trade setup to form. So let the trade play out. Okay, as you can see, the 5 minutes tapped into this. So now on the 1 minute, the 5 minute candle's closed. So now we go down to the 1 minute, and on the 1 minute after the 5 minutes closed, all we look for is a bearish engulfing because we're entering trades off a bearish order block. So on the 1 minute, it can close below the body or the whole wick. So as you can see, this is closed below the whole wick. So all you need to do is enter here, set your stop loss right above the high. You don't want to be too greedy with it and decrease the stop loss even more. So you want to put it just above this high, and if you get stopped out, you enter again. However, the stop loss is already small, it's only a 4 pip stop loss. And you could take profit at the next liquidity point. So as you can see at this point right here on the 5 minute, we got this low right here. The next main low is right here with these equal lows. As you can see right here, so this could be our next main liquidity point before we look for possible trades in the other direction. However, we're going to look for sales now because price tapped into this order block and ticked all the boxes. Let's see how price moves away. Okay, as you can see, price took out our first liquidity point over there. So you could take partial, secure some of your trade. And as you can see, price smashes our next TP over there for exactly a 1 to 4. And you guys could ping pong this strategy, guys. You could really play about with this strategy. So now on the 5 minute, go up to the 5 minute now. And we're waiting for price to tap into our next order block if it does within our trading times. If it taps into this order block over here outside of our trading window, we're not going to enter the trade. All we look for is the entry within this time window. Okay, so as you can see, price taps into it over here. Now we go down to the 1 minute. And as you can see, the engulfings already happened before the 5 minute candle, before the 5 minute candle close. And we want to look for engulfings after the 5 minute candle close. So if we see move back down to here and more engulfings, then we can enter, but we're not going to enter based off these previous 1 minute engulfings. So we're going to stick to the strategy. So now, as you can see, this sell side liquidity was taken out over here on the 1 minute. So now we could just expect a market structure shift from this high right here, or this high, based off this fractal high. So we just let price do its thing. So as you can see over here, the body actually engulfed over here. So this would have been your entry over here. You can enter here based off this market structure shift. However, your stop loss will be a bit bigger. If you were to enter over here based off this body engulfing, you could do so as well. Right here, place a stop loss below this low. Remember, set rules. It's a 1.9 pip stop loss. And I'm not going to promise you high risk reward trades with every single setup. However, because I'm a realistic trader, guys, I know how trading works. However, you can really maximize the risk reward with this strategy. So as you can see, we've got some equal highs right here. So this could be your first TP. And the main highs, if you do have your daily bias, which you don't need, if you do have your daily bias, then you could target higher levels. However, this would be the next main level. As you can see, why is this likely to get hit? Because the order block's been mitigated here already. So now price can run through these highs right here. So you can mark out multiple take profit areas, for example, this one over here, or this order block, and then look for this high over here, for example. And then this could be your main take profit. So let's see what this is overall. This is overall a 1 to 16, and you won't get 1 to 16s and over 1 to 10s and 1 to 15s on every single trade. However, you will maximize the risk reward with this strategy. So let's play out and let's see how it goes. Just as you can see, price runs away. I'm just going to go on the 50 minutes to speed things up. As you can see, price is moving away nicely. And notice how both our entries were within our time window. Okay, and as you can see, our take profit was absolutely smashed and price went even higher for a 1 to 31, but realistically wouldn't have held it till then. We would have held it till here max. So remember, we're just following these set rules which I've marked out for you guys. As you can see, the liquidity sweep example was here and the straight order block touch was right here. So you guys should definitely go back test this strategy out for yourselves. As you can see, we've got a 1 to 4 here and a 1 to 15 on the next trade, a 1 to 16 even. So overall, over a 1 to 20. So backtest this, forward test this, test it live. Let me know how you get on. Any more video suggestions, let me know in the comment section down below. And that's all for today, guys. Happy trading. See you next video.